Trading cryptocurrency can be tricky, but it doesn't have to be. There are tried and true trading methods that you can use to minimize risk and maximize returns in the crypto market. Now, many of these methods fall under the umbrella of swing trading, and today I'm going to tell you about a few simple swing trading techniques that will help you turn wrecked into riches. I know you're eager to start, but if I don't give you a disclaimer, I'll end up in a police car. Financial advice is not something I can provide. Education and entertainment are the only things I supply. Contact a financial advisor if you have dollar signs in your eyes. If you're new to this corner of the tube, my name is Guy and crypto is what I do. My mission is to bring you the highest quality crypto content you will ever see. Coins, tokens, news reviews, and other crypto-related topics that come to me. If this resonates with you, subscribe to the channel and ping that notification bell too. I've left some timestamps below that you can use to skip ahead if you're short on time. If you manage to watch till the end though, that's mighty fine. Now, I know these rhymes are elating, but it's about time we got started with swing trading. Swing trading is a type of trading technique that focuses on the long-term price trend of an asset. By contrast, day trading is a type of trading technique that focuses on the short-term price trend of an asset. Swing trading is often said to be safer than day trading, but this ultimately depends on the swing trading strategy being used. Now, there are many different swing trading strategies. These are typically tailored to a specific asset class, and they can vary substantially from trader to trader. The swing trading strategies for cryptocurrency I'll be discussing today are not exhaustive, and I encourage all of you to create a swing trading strategy of your own if you have the time and energy. If you have neither of the two, the swing strategies I'll be discussing today should do. Now, there are 5 things to keep in mind when swing trading cryptocurrencies. First, follow the trend. Second, pay attention to patterns. Third, take note of moving averages. Fourth, use indicators for additional confirmation. And fifth, if what you're seeing doesn't make any sense, then wait. Do not trade. Note that I'll be focusing on Bitcoin for the purposes of this tutorial, but I will explain how these factors change when applied to large and mid-cap altcoins near the end of the video. I'll also explain a few patterns and indicators as we go along, but I recommend checking out my previous technical analysis tutorials to get the whole story. Those will be in the description. As I mentioned a few moments ago, swing trading focuses on the long-term price trend of an asset. This should be easy to assess on websites like CoinMarketCap and CoinGecko. As you can see, zooming out reveals a clear long-term uptrend for BTC. This trend is even clearer when you plot BTC's price on a logarithmic scale. You can find it by clicking on the log button on CoinMarketCap or the logarithmic button on CoinGecko. If the cryptocurrency you want to swing trade is clearly in a long-term downtrend, you might want to consider another coin or token, or just stick to day trading, which I don't recommend, by the way. That's because day trading offers about the same percentage returns as hodling in the long term, assuming you're not holding on to a shitcoin, of course. Now, you can learn more about how to spot a shitcoin by watching my video about that in the top right. Anyways, once you've identified the long-term price trend, the next step is to identify any price patterns on the monthly chart. What you're doing here is assessing whether now is a good time to swing trade the cryptocurrency you're interested in. If you can see that this coin or token is currently in the middle or near the end of a bullish price pattern, it might be a good time to buy. Bullish price patterns include double bottoms, inverted head and shoulders, falling wedges, and bull flags. Conversely, if you can see that this coin or token currently is in the middle or near the end of a bearish price pattern, you might want to wait and see. Bearish price patterns include double tops, head and shoulders, rising wedges, and bear flags. Now, using BTC's price action as an example, I reckon I see a bull flag forming on the monthly. This suggests that now is a good time for a swing trade, and I could wait to buy until we hit 61k for confirmation just to be safe. A conservative price target is around 70k when measuring with the body of the reference candle, and an optimistic price target is around 75k when measuring with the wick of the reference candle. Now, one of these price targets should be hit in December, January, or February, assuming the bull flag pattern plays out according to plan. Once you've identified the long-term price trend and the presence of a bullish price pattern on the monthly chart, the next step is to drill down into the daily chart. What you're doing here is assessing where you should sell if prices start to drop unexpectedly, and check to see if there are any short-term price patterns that could take you to that price point or vice versa. If you watch my video about my personal crypto trading strategy, you'll know that I pay close attention to the 50-day, 128-day, and 200-day moving averages. Now, in the context of swing trading, these play an important role as support during a long-term uptrend, and as resistance when prices fall below them. BTC tends to bounce off the 50-day moving average, but as you can see, we've recently broken below it and are having a hard time getting back above it. Although this isn't a good sign, it's not nearly as bad as a break below the 128-day moving average, which brought about the bear slump in the spring. We also broke below the 200-day moving average back then. As such, if prices fall below these two price points, you might want to sell. And if you want to be extra safe, you might want to sell when prices fall below whichever moving average is the highest. In this case, that would be the 128-day moving average, which is sitting at around 50k. And remember that these must be a definitive close below this point, i.e. at least 1 or 2 days of prices dropping below it. If you see prices approaching this point the way we did recently, try and identify any reversal patterns before you panic. Looking at BTC's recent price history, we saw a descending triangle on the daily which broke to the downside in mid-November. Then we saw two bear flags that brought BTC down to around 55k. For a reversal to happen, there needs to be a bullish pattern like the ones I mentioned earlier, or at least a reversal candlestick pattern. Now, reversal candlestick patterns include 3 white soldiers, morning star, bullish hammer, 3-line strike, and bullish abandoned baby. Yes, that's actually what it's called. In the absence of any reversal patterns, the safest thing is to assume the worst and take some money off the table, especially if you're in profit. Remember that waiting is also a wise decision, and if you're feeling brave, you can buy the dip, and I have a video in the top right that can help you do it. Once you've identified the long-term price trend, the presence of a bullish price pattern on the monthly chart and moving averages on the daily chart, along with any reversal or continuation patterns, the last step is to confirm everything you're seeing using a series of technical indicators, specifically the Moving Average Divergence Convergence, or MACD, the Relative Strength Index, or RSI, and Bollinger Bands. Now, while trading volume is another important indicator that many swing traders keep in mind, it's arguably less reliable when it comes to cryptocurrency. In theory, trading volume is the easiest way to determine if a pattern or price trend will continue, and this is confirmed when there is lots of trading volume supporting a bearish, bullish, or reversal pattern. In practice, however, the low balance of BTC on exchanges means that it takes a lot less capital to push prices up or down, and this means it takes less trading volume to move prices around. As you can see on BTC's weekly price chart, trading volume has been on the decline since May, while prices have spiked during that time. An experienced swing trader would look at this and see a bearish divergence, opposing trends between prices and trading volume, which suggests that BTC is about to crash. The thing is that the balance of BTC on exchanges has likewise declined substantially since May, and this trend continues to this day. This means that a decline in trading volume is arguably of little concern when it comes to predicting price, so long as the BTC on exchanges continues to drop too. What's more important is the MACD. Now, as some of you will know, the MACD tells you whether there's about to be a change in the trend. This is what it means when those two lines cross. Starting with BTC on the monthly, we can see that those two lines are coming close but have not yet crossed. This confirms that we have a few more green months ahead. Switching to the weekly, we see a similar story, though these lines are coming closer to signaling a reversal. Now, interestingly, BTC's daily MACD shows that we saw at the start a shorter-term reversal at the beginning of November, something that was foreshadowed by a divergence between the MACD and price, which started back in October. We appear to be approaching another short-term reversal, this time to the upside. Taken together, this suggests that BTC will drop a bit more before rallying in December, and this is in line with macro factors such as the Bitcoin options expiries, which tend to drag down the price of BTC at the end of each month. Next up is the RSI, which gives you a sign of when it might be a good time to sell and a good time to buy. As a general rule of thumb, an RSI above 70 means it's a good time to sell, and an RSI below 30 means it's a good time to buy. Starting again with BTC on the monthly, the RSI is showing a slight divergence in relation to price, which is a bad sign. On the weekly, however, the RSI looks just fine and suggests it could soon be a good time to buy. We can also see a bit of a divergence between price and the RSI on the daily, but this seems to be correcting, which is a good sign and also suggests that it might be high time to buy. Taken together, this further confirms that BTC will drop before continuing its rally, though the signals here are more mixed than they were with the MACD. Now be sure to keep these inconsistencies in mind before making any big trades. And last but not least, we have the Bollinger Band indicator, which gives you the range within which prices are likely to move. If prices pop above the Bollinger Band, it's probably a good time to sell. If prices drop below the Bollinger Band, it's probably a good time to buy. So, starting once more with BTC on the monthly, we can see that the upper bound range for BTC in December is around 71k, which is almost the same as the conservative price target we determined with that bull flag we identified earlier. If BTC's price pops above the Bollinger Band the way it did back in April and May, this could take BTC up to around 78k, which is again in line with the optimistic price target we identified earlier. Meanwhile, the weekly Bollinger Bands suggest an upper bound price target of 70k, and the daily Bollinger Bands suggest an upper bound price target of 68k. Taken together, this provides the final confirmation we need to know that we can safely buy BTC to swing trade, and our projected profit is around 30% over the next month or two. Not bad for BTC, but swing trading gains are obviously bigger with altcoins. When it comes to swing trading altcoins, swing trading can be a bit more complicated. This is because altcoins tend to be more volatile, and their price action can be more easily influenced by other factors that can't always be seen on the charts. For example, larger altcoins like Ethereum, Solana, and Cardano will occasionally appear to be printing a bullish or bearish price pattern and suddenly do the complete opposite. Sometimes what you're seeing when this happens is a low-resolution version of Bitcoin's price action, because altcoins are heavily correlated to BTC, especially larger ones. Other times what you're seeing is idiosyncratic to that coin, i.e. an unexpected announcement that causes the coin or token to dump or pump, respectively. The price action that follows these unexpected announcements tends to violate every single indicator, moving average, price pattern, and sometimes even the long-term price trend on an altcoin. This happens a lot among mid and small cap altcoins, which I'll discuss in a moment. First though, let's look at how to swing trade large cap altcoins. Using ETH as an example, the process is more or less the same as with BTC. Begin by assessing the long-term price trend on both the regular and log scale. Moving on to ETH's monthly chart, notice how it looks eerily similar to BTC. Now, ETH also saw a bull flag a couple of months back and is likewise on the cusp of another bull flag breakout. A conservative price target is around 5.5k when measured from the body of the reference candle, and an optimistic target is around 6k when measured from the wick of the reference candle. ETH's daily price chart is where things look a little different. Although ETH also respects the 128-day and 200-day moving averages, the 50-day moving average seems to be a lot more important in terms of cutting losses for swing trading. This could be due to the shorter time preference you often find among altcoin holders. In any case, it's wise to play around with different moving averages to see which one your favorite altcoin respects the most. Not surprisingly, the MACD and RSI for ETH look about the same as BTC on the monthly, weekly, and daily, and so do the divergences, or lack thereof. However, the Bollinger Band suggests that the 5.5k conservative price target we initially set might not be conservative enough, especially since ETH has historically respected that upper bound range. This could be because many ETH traders are likely to roll their ETH gains into BTC if BTC takes off in the way I mentioned earlier, and the price charts are simply reflecting that historical tendency. Remember, low resolution. Now, I'll quickly point out that all these indicators do lag behind price, and the upper bound range of the Bollinger Band will change as ETH continues to trend up over time. Even so, the rotation between altcoins and BTC is well known, and something you absolutely must factor in when you swing trade altcoins. Now, you can learn more about the ebb and flow of the crypto market by checking out my video about that, and you can find it up there in the top right. And now, for the moment I'm sure many of you have been waiting for, swing trading mid and low cap altcoins. I'll use two well-known tokens as examples. The first is REN, and as you can see, it looks like its price is in a long-term uptrend, but its price action looks a bit strange compared with other altcoins. This is because REN belongs to a cryptocurrency protocol that makes it possible to move cryptocurrencies between different blockchains in a trustless manner. Now, while REN does tend to rise and fall with BTC, its price action is more directly correlated with the demand for its trustless wrapping protocol, since REN must be staked by dark nodes which secure the vaults containing the coins and tokens being sent between chains. This means that REN's price can be pretty accurately predicted by following the total value locked on its protocol. As such, it's better to analyze REN's price from a fundamental lens rather than a technical one, and there are a lot of altcoins that require this kind of analysis. At the other end of the altcoin spectrum, you have tokens like Audius's Audio, which pumps and dumps on a regular basis. Audio is in a clear uptrend, but even from a distance, you can see that its price action is characterized by a pump, followed by a slow trickle down before another pump. This is a pattern you will see with just about every mid and small cap altcoin. When they're newer, like Audio is, it's damn near impossible to get a grasp of what's going on in the long term since the data isn't available, and this makes swing trading very difficult. To make things worse, slapping on all the indicators on the daily reveals a mess of mixed messages, which makes them pointless. If you're lucky, looking at shorter timeframes can offer an explanation as to what's going on, but getting that close to the price action probably isn't going to help you with swing trading because it deals with longer timeframes. Now, I don't know who needs to hear it, but a bull flag on the hourly doesn't mean that coin or token is going to the moon. Now, this isn't to say that altcoins like Audio are bad. They're just extremely difficult to swing trade for the time being. As more data becomes available, it will become clear which way they're headed. For now, though, their long-term potential has yet to be assessed by the crypto market as a whole. Now, if you're curious about Audius, you can learn more about it using the link up there in the top right. Now, that's it for today's technical analysis tutorial, folks. But if you learned something new, hit that like button. To make sure the next video makes its way to you, subscribing to the channel and pinging that notification bell is what you should do. If you want more from the Coin Bureau, check out Coin Bureau clips to see interviews with the team, behind-the-scenes bloopers, and original flicks. You can also follow me on Twitter, TikTok, and Instagram for hot takes and memes, and join my Telegram channel to get daily crypto news updates that will keep you up to speed. And if you're constantly getting wrecked by the crypto market, my weekly newsletter is what you need. If you're looking for crypto-themed Christmas gifts, head on over to the Coin Bureau merch store and pick out an outfit. Tees, hoodies, hats, and more are waiting for you in the description below. Thanks so much for sticking around. It really makes my heart pound. This is Guy saying goodbye.